Ooh, ooh. Howdy gang, my name's Logan Samuel and welcome back to my channel. In today's video, we'll be talking about the importance of credit and how to build it to get you that 850 credit score. This video will be great for you if you just turned 18 and are looking to set yourself up for success or give yourself a head start, or if you're looking to make a big purchase, whether that's a house, a car, or maybe just the next Icon or Epic Pass. Or lastly, maybe you've struggled with building credit and credit in general in the past, and you're looking to turn your situation around. All right, explicitly, what you guys could get out of this video today. First, we'll discuss the importance of credit and the impact that it can have on your financial situation. 2, we'll go into the 6 detailed steps on how to build credit. And 3, since this has been a fun journey for me since I turned 18, I'll give you a few tips that I've learned along the way, especially since I just hit my 800 credit score. I feel like growing up, everyone always says, build your credit, and having great credit is important. So to start, let's get into more detail into this. Let's discuss why that is and what having great credit can help you do. First, having great credit gives you optionality and access. So do you want that fancy credit card that gives you free flights or free lounge access? Or do you want the best terms on your home loan? Or are you going to start a small business and you need a great loan to get going? These are some of the benefits that having great credit can give you access to. You aren't pigeonholed into taking the worst loans or the hardest terms. You have the optionality to choose the loans and the financing that works best for your needs. Second, having great credit and a great credit score can save you a ton of money. And this is in the form of interest payments over time. For example, let's assume we have 2 friends, person 1 and person 2. Person 1 has a very good credit score of 760. And person 2 has a good credit score of 700. Now let's assume that they're both also trying to buy a house worth $346,270. This is what Zillow quotes as the average annual US house price today. Now, let's assume, or using a table from Business Insider, we can assume that the annual percentage interest rate for person 1 and their credit score is roughly 6.55%, and the annual percentage interest rate for person 2 is roughly 6.77%. Let's assume that each person puts 20% down and has a 30-year term mortgage. Using an online interest calculator that can be found at mortgagecalculator.org or investinganswers.com, we can estimate the total amount that each person will pay in interest over the course of the loan. For person 1, this comes out to be roughly $356,601. And for person 2, this comes out to be $371,130. So this means that over the course of the loan, person 1 is able to save over $15,000 just because they have better credit. Now that's quite a lot of money that can be saved by just following the 6 simple steps, or 6 straightforward steps that we'll talk about later in this video. But before we get into that, let's go over some general context. There are 3 primary credit bureaus: Equifax, Experian, and TransUnion. These guys track, monitor, and report your credit to lenders. So when you go to Chase Bank and say, I want to take out a loan, Chase is going to call up one or more of these credit bureaus and ask for a report on how well you manage credit. So when I mean build your credit, I mean let's look more impressive to these 3 credit bureaus because these are the folks that track your credit and report your credit score. Additionally, when it comes to how your credit and your credit score are calculated, there are a number of different measures, most of which are proprietary. But the most public and easiest to get access to is a measure called the FICO score. Your FICO score is a number ranging from 300 to 850. Anything below 580 being considered poor credit, and anything above 800 being considered exceptional credit. And your FICO score is a combination of 5 different metrics, each of which carrying a different weighting. 35% of your credit score is based on your payment history. For example, did you and do you pay your bills on time? The more that you pay on time, the better your credit score. 30% is based on your credit utilization. For example, of your total available credit, how much are you currently using? If you have $1,000 in a credit card limit and you are only using $100, that is a 10% utilization. The lower your utilization, the better your credit score will be. 15% of your FICO score is based on your length of credit history. For example, how long you have had your oldest credit account for, how long you have had your newest credit account for, and the average age of all your credit accounts. The older or longer you have had credit accounts open for, the better your credit score will be. And 10% of your FICO score is based on your credit mix. For example, do you have a mix of credit loans like credit cards and mortgages? Generally, the more mix you have, the better your credit score will be. And finally, 10% of your FICO score is based on recent credit inquiries. For example, how many times have you applied for new credit? The fewer the inquiries, the better your credit score will be. Now that we know how our credit is calculated, it should be pretty straightforward to follow these next 6 steps and focus on building our credit. Step 1, make every payment on time. The largest portion of your credit score is based on your on-time payment history. And failing to make a payment or being late on a payment can significantly harm your credit score. This is likely the most important aspect or the most important step in building your credit. Step number 2, people that subscribe to my channel get an automatic and guaranteed 850 plus credit score. Okay, no, I'm just kidding about that, but I really do appreciate it, and adding new subscribers helps me continue to grow and learn from my channel. It also helps out a ton with the YouTube algorithm. Okay, now with that said, the real step number 2, which is lower your credit utilization, either by minimizing your credit spend or maximizing your total available credit. Credit utilization is the second biggest factor affecting your FICO credit score. And by utilization, I mean the ratio between the amount of credit you spend and your total available credit. So there are 2 approaches that you can take to minimize your credit utilization. The first is to minimize your credit spend, or essentially, if you spend $0 on credit cards, you will have a 0% utilization. Now, this isn't something I do since I like to maximize my credit card rewards points on everyday spending, but it is an option. The second method is to maximize your total available credit. Now, this is something where I focus on. Every 6 months, I apply for a credit limit increase with my credit card companies. Step number 3, open up a line of credit as soon as possible and keep it open for as long as possible. Essentially, right when you turn 18, go and apply for a credit card. The rationale here is that 15% of your credit score is based on the age of your credit accounts. So the older your credit accounts, the higher your credit score will be. Now, this is something that I did right when I turned 18. I went and applied for a credit card. And it's a card that I don't use a ton anymore, but I still have it open. And I'm sure it's had an impact, or quite a bit of an impact, on my current credit score. Step number 4, have a good mix of credit. Since 10% of your credit score is based on your credit mix, it behooves you to have a good variety of credit. Now, with that said, this isn't an area that I have focused on, mainly because outside of mortgages and credit cards, I don't necessarily see the benefit of carrying other lines of personal loans. And it hasn't affected my credit score too much, as I just crossed that 800 FICO score line. Step number 5, limit your credit inquiries. Since hard pulls and new credit applications can negatively impact your FICO score, you want to limit those where possible. So if you don't need it, then don't apply for new lines of credit, because it could slightly lower your credit score. And finally, step number 6, monitor your credit regularly. To ensure you continue to stay on the right track and continue to build your credit, you should check in on your credit score routinely. Your bank or credit card should have tools to help make this a super easy process. For me, I use Amex and Capital One to check in on my credit score each week. And I found this activity to be quite motivating in keeping me on my credit building journey. Fantastic. With those 6 steps in mind, here are a few quick tips to help you in your credit journey. Number 1, auto payments. Make sure to set up auto payments to ensure on-time payments each month. Number 2, if you're ever late on a credit card payment, call up your credit card company. Most of the time, they'll wipe any fees associated with the late payment. Tip number 3, have a $0 credit card balance before applying for a mortgage or a big purchase. I will be applying for a mortgage later this year and plan to bring my credit utilization down to 0% by paying down all of my credit cards before applying. And lastly, tip number 4, if you're under the age of 18 or you have kids under the age of 18, consider adding them as an authorized user on your credit card accounts. Now, I'm not certain if this will impact their future credit scores, but some articles suggest that adding them as authorized users does help them start to build credit a little bit earlier. Great. Hopefully you all found that useful. In summary, We learned that credit was important because it gives you optionality and access. It also helps you save a ton of money in financing. We also learned the 6 steps to building credit. Number 1, make payments on time. Number 2, keep your credit utilization low. Number 3, open up a line of credit as soon as you can and keep it open for as long as you can. Number 4, have a good mix of credit. Number 5, limit your credit inquiries. And number 6, monitor your credit routinely. And again, this is the 6th video in my 9-part personal finance crash course. So tune in again next week to learn more about investing and how to make your money work for you. Thank you for watching if you made it this far in the video. If you liked the video, please like, comment, subscribe. Your engagement means a ton to me, and it also helps out a ton with the YouTube algorithm. And also, since I'm trying to learn as much as I can through this process, please feel free to write if you have any tips or thoughts or advice. Please write them in the comments below, and I'll promise to respond to every comment made on this post. Thank you, much love, and adios.